So this week we've had a stock market which has turned ugly once again, and it has been this cycle for a couple of weeks now, where we have a week where we do very well, and then we have the week after which seems to give it back, and we've been in this cycle for the last couple of weeks. Before that obviously was in the kind of period of time where we're just dropping. Now it seems to be a bit of a tug of war battle going on. So we're going to talk about this, a bit of a video where I always make these videos when we have the negative weeks. I always like coming out and saying everything's going to be okay, and this is going to be a video saying that everything's going to be okay. But certainly at the moment there's this kind of tug of war at the moment where we try and go higher and then we just give it all back, and we're going to speak about that anyway today, and just some of the things that are going on in the stock market. So believe it or not, this is how bad things or how bad things are. We have just endured the worst stock market since 1970. So the last 6 months, because believe it or not, we're halfway through the year, this first half of the year was the worst stock market since 1970. That's unbelievable when you think about it. When you look at that 50-year time period, and you think about the things that have gone on between wars, pandemics, that you're thinking, okay, the whole economy is shutting down. You had the whole banking system collapse. There's a lot of issues that have happened in that period of time. And for us right now to be part of history in the stock market, to say that you went through the worst stock market since 1970 is fair play. Like, that takes a lot of doing to make it through the other side. Without doubt, there's been investors on the way that have given up. There's been investors that have gone, this is it. This stock market business is way too hard, and they've quit. But for you guys that probably here watching this video, you're sticking through it, and you currently, fair play if you make it through the other side. You get to claim, hold on, I've been through the worst stock market since 1970. That kind of builds you as an investor. Whenever you have future dips, they'll all look pretty much nothing compared to this one, because you're thinking, well, I made it through the worst stock market since 1970. It's crazy to think how bad things are right now. And the crazy thing is that, you do look at the stock market and you look and think, worst stock market since 1970. And you do generally, I don't know if it's just me, but you look out there going, there's a few issues going on in the world right now, don't get me wrong, but you look at it and go, inflation's a little bit high, but that looks like it could potentially be peaking soon. Numbers, employment is still pretty strong. There's not anything that's as bad as like a banking system nearly collapsing, or a pandemic which you don't know how long the economy is going to be shut down for. When you look at that sort of context and you think, it's not as bad as that, is it? And it's crazy to think this is the drop that we're on at the moment, and this is how bad it is right now. And when you put it into context, you think, does it really deserve to be in this sort of situation right now? But I like making these videos when we have a really tough time in the stock market. I like making these videos in the really big red days and saying that everything's going to be okay. And today's going to be one of those videos, and I've got the whiteboard back to do it as well. The worst stock market since 1970. Fear is back. You notice it so much when we have these red weeks. You notice the change in the fear that's out there. Like, you can see the amount of investors that invest rather than looking, okay, is this a good business for the next 2 to 5 years? At these prices, am I going to make money in the next 2 to 5 years? You notice who is switched on in that point of view and who is seeking opportunities. And you also notice who are the investors that are just staring at the stock prices and looking at stock prices and going, oh, that index is down 20%, things are awful, it's only going to get worse. And it would be the same that if in 1 month's time we had a stock market that rose 10-20%, you'd see the same sort of investors that go, oh, everything's amazing, look, everything's up 10-20%. And you start noticing who are the investors that are staring at the stock prices, and their emotions are on what that stock price is doing. Especially like this week, now that we have all the stock prices moving in a downward trend. Yesterday in particular was one of those days where you look, I looked at like a comment section, for example, and you can see like the negativity in the comment section come back because all the stock prices are down. Like, oh yeah, you've got gang stock and it's down, that's terrible, it's going bankrupt. And it's like, are you saying that because the share price is moving down, or are you looking at the opportunity here and looking at the financials and going, well, actually they're moving to profitability, or actually they're growing revenue in the right direction. Actually, probably the business is actually fundamentally in a good position, and if that share price keeps going down, maybe this is a fantastic opportunity. So that is clear that when obviously we have this happen, that's when unfortunately you see who are the investors that are switched on and looking for opportunities and which are the emotional investors. And that was especially clear in the video that I did yesterday in the comment section. Next thing is you have to go through these markets. You have to go through, I spelled bear wrong, I missed the R on there. You have to go through the bear markets. You know, that's part of being an investor. You have to have the good times and you got to have the bad times. One day we'll go from being in this bad time, this bear market that we're in right now, to having, you know, stocks at 52-week highs and good returns coming in, just like how we were, you know, over a year ago. And if you look a year prior to that, what scenario were we in? We're in a bear market and stocks were going down. It's the market cycle. We have market cycles all the time. We have market cycles where we have good times and we have bad times. As an investor, you have to realize that happens. Yeah, as the stock market investor, you've got to realize you'll have good times and bad times. That's part of being in the market, and you have to prepare for that. And the only way to prepare for that is to be focusing on your business and where that business is going long term. Because in long term, everything will be okay. Short term, market fluctuations happen. We're going through one right now. Next thing, people look at bear markets as horrible things, bad times. However, bear markets are the opportunities. Bear markets are where you get them stocks, businesses for half the value of what they should be. You know, 30% off, 40% off, 50% off. And that's actually where you get the opportunities. That's where you see most of the great investors make a lot of their best investments, is through the bear markets. And bear markets in particular create the bull markets. You have to have the bear markets to create the bull markets. You have to have the stocks go down. You have to have the stocks to come cheaper. And then eventually people realize, okay, you know what? Actually, we should be buying that opportunity. And more than likely what happens is when we go through this, you know, bear market for 12 months, that actually creates the bull market, and bull markets tend to last longer than bear markets. So these bear markets here, you know, bring all the cash out and eventually people sit on the sidelines, and then that will create the next leg up for the next bull run in the stock markets. So what is very clear right now is that more than anything, when we're in the bear market, the risk is less than what it is if we're actually in the bull market. Because when we're set in this bear market, you know at some point, especially when you've lost so much valuation, the chances of it actually going down lower now is a lot slimmer. You know, the chances of us actually having a 30% drop now is a lot slimmer than where if we were at a bull market and we're at the top of a bull market, the chance of having a 30% drop is a lot higher. And now there's all this cash on the sidelines, people looking for them opportunities, and it's not too long until people eventually go, let's actually go buy this opportunity. And you have to be prepared for these bear markets. I think what a few people have been surprised by is because we had the CV dip, and the CV dip lasted like 3-4 months. But historically, you know, bear markets do last 12 months. You have to be patient. You have to stick through the bear markets and go, it's actually going to be a tough period of time. There's a tough period of time where we have, you know, 12 months of basically being down here. And in that time, all you want to be doing is increasing the cash coming into your accounts, increasing the ability to buy the dips. You know, look for what stocks whatever you are looking for, whether it's Google, whether it's Microsoft, whether it's HIMS, whether it's Celsius, whatever you think is a very good investment. Those are the opportunities you want to be capitalizing on, because when we're in this bear market for 12 months, sure, it's 12 months of looking at your account and going, you've just not done anything in 12 months. But don't look at it from that point of view. Look at it that, okay, I've got an opportunity to buy this stock that I love at half the value of what it was. And when we do go in a very good run, I'm going to make good money off this. And that's what you want to be looking at. 12 months of, yeah, it's painful, but 12 months that in a few years' time, you look at that and go, I'm glad I capitalized on that dip in that bear market. So you've got to realize that this is a period of time where historically the average is 12 months of pain. And like I was just saying there, buying opportunities. You've got to look at this as a buying opportunity. Without doubt, bear markets create the best buying opportunities in businesses, because you get so many businesses that lose half the value. You get businesses that are performing absolutely amazing on financials, but because there's so much negativity out there, people will sell that company off just because the market sentiment is negative. And those are massive opportunities you want to be capitalizing on. There's a few of them out there. There's a few of them businesses that are getting caught up in this bear market and they're losing half the value for no reason. If you look at the financials of the company, they're stronger and stronger and stronger. Those are the really big buying opportunities to be capitalizing on right now. And right now, you got to look at the negativity that's priced in. A lot of stocks are losing, 50% of the value. Indexes are down 30%. And sure, you can say that we were at stretch valuations, but you've got to look at the dip right now. You've got to look at valuations, especially small and mid caps. Small and mid caps are like trading at their historically low averages since like 2008. You've got to look at that. You've got to look at that and go, that is the Great Recession. That is when the whole banking system was potentially going to collapse. And you're putting small and mid caps right now at them sort of valuations. And look what happened in the few years after the Great Recession. Went on unbelievable runs. And you've got to look at that and go, we're nowhere near that time frame. We're nowhere near like the Great Recession right now. We could get there. I'm not going to say that this is the bottom. We could go lower. But when you look at what currently is priced in right now, and you think, okay, yeah, there's a bit of inflation priced in, inflation, Ukraine-Russia situation, everything like that, logistic issues. Sure, there's a bit of negativity out there that's affecting companies, but you got to look at the drop they're on. You got to look at the valuations that they're on. You look at the valuations here, the same sort of valuations since the Great Recession. Look at what. And that was terrible, and we're not even anywhere near that. And look at the valuations that we're at. We are set for a very good rebound in the next few years, a very good run in the stock market. Big market caps are maybe a little bit different. I think their valuations aren't as cheap. However, I think there's still some good opportunities out there. But you've got to look at the negativity that's priced in. There's a lot of negativity priced in. And there's a lot of stocks unjustified sold off at really good valuations. And the last thing is, don't time the market. There's a few people out here, especially this always happens in the dips, that think they can time the market. You can't. You can't time the market. It's impossible. All investors say you cannot time the market. No one knows what the date is when we put the bottom in. It could be this week, it could be next month, it could be next year. We don't know when the bottom is. I don't know where the bottom is. I'm not going to tell you that I know where the bottom is. I don't. I can't tell you when we're going to rebound. But what I will tell you is that you don't want to be timing the market, because you can't predict that date we rebound. The day that we rebound, stocks will rebound very quickly. You've seen it when we have 1 week of positive uptrend in the stock market. Look at how much some of them stocks rally in 1 week. We will have 2 or 3 weeks of a very good rally. When that happens, which we don't know when it will happen, but when it does, if you're trying to time the market and you miss that, them 2 or 3 weeks will recover half of what we have lost in this period of time. And if you miss them 2 or 3 weeks, you're going to suffer. You're going to miss out on some very, very good gains. So rather than trying to time the market, the best thing at the moment is to just accumulate shares in what companies you think are absolutely amazing, or whether it be the indexes or whatever. Because I tell you, when we have the rebound, it will rebound fast. You won't know when, but there's so much cash on the sidelines. When a few people start nibbling away and taking that risk, when a few people see, oh, you know what, that inflation's peaking a little bit now, maybe this is it, this is where we rebound, that money will flood in quick and that will rebound fast. And if you're timing the market, you can miss that instantly. And the best way to avoid that is just by making sure you're in the market, you're thinking in long term, you're accumulating shares of your favourite company, getting that average lower, and you'll be a winner. So that's what the key things are to do right now. So yeah, this is bad. This is a bad period of time for the stock market. As an investor, it's been tough. However, when you look at what stage we're in right now, we're in a bit more of a positive stage. And also, it's very important to look at this as a positive opportunity rather than a negative, because this is where a lot of the great investors really do capitalize on these opportunities. The opportunities to get businesses at very good, very cheap valuations, that sometimes as well are unjustified valuations because the businesses have been performing amazing. So it's time to capitalize on them opportunities. So I hope you enjoyed it. Hit the like button if you're new, subscribe. I'll see you next video.